Okay, I'm going to explain question number 3. Okay, so question number 3, starting says that the bank statement, okay, of U2 trading showed total withdrawals of $4,500 for insurance, okay, and total deposits of $2,700, okay, for commission income. Okay, withdrawals is the same as payments. So question is actually saying that I paid, okay, the business paid $4,500 for insurance expense. Okay, this is actually my step 1, if you recall. Okay, so step 1, I actually have to record down the amount that is paid or received. So I paid insurance expense of $4,500, so I will debit $4,500 insurance expense. Okay, I credit cash at bank because it's from the bank statement. Okay, and deposits of 2,700 for commission income. So because I received money, deposits means receiving money, I received 2,700. So step 1 also says that for commission income, I received commission income 2,700, debit cash at bank $2,700. Okay, let's prepare the commission income account first. Okay, my year end is 30th June. Okay, so they say that U2 Trading sells goods on behalf of other businesses and earns commission income. Okay, so because the business actually sells goods for other businesses, okay, and hence these businesses will actually give U2 Trading some income, okay, commission income. Okay, and they say that commission income for the year is at 8% on the sales of goods, okay, $86,500. So U2 Trading actually help other businesses to sell goods, and they actually earned $86,500 from selling these goods. But this does not belong to U2 Trading. Okay, this $86,500 belongs to other businesses. Okay, the one that U2 Trading helps to sell goods for. Okay, but what does U2 Trading earns? U2 Trading earns the commission income from selling these goods. Okay, and this, obviously, the more they sell, the higher the commission income. So what is the commission income that is earned? 8% times the sales that they get is this amount. Okay, so the commission income belongs to U2 Trading. They earn it. Okay, my year end is on 30th June according to the question here. Okay, starting of the year, 1st July, right? So I'm supposed to earn 6,920. Okay, look at the question here. But how much did the business actually received? Look at the question on top. They only received $2,700. Okay, I'm supposed to earn 6,920. I only received 2,700. Okay, so there's this amount that I have not received. Okay, have not received, but I am supposed to receive. Okay, and I call this a receivable. Okay, I'm supposed to receive it, but I have not received. How can we calculate the receivable? Okay, 6,920 minus $2,700, I get 4,220. Okay, so step 2, what do we do to adjust for my para adjustments? I will credit commission income because I am supposed to earn it. I have earned it. I'm supposed to receive it. So my income will actually go up by 4,220. Okay, and receivable 4,220. Okay, let's look at the answers. Okay, so step 1, I'll record down my commission income, credit $2,700. So I will credit $2,700. Okay, opposite account, cash at bank. Okay, second step, remember just now I said that there's this amount that is receivable. Okay, just that I have not received yet, but I have earned it. So my income will go up by 4,220. Okay, opposite account, commission income, receivable. Okay, finally, transfer everything to profit and loss. Okay, I'm supposed to zeroize the account, so the balance is supposed to be 0. Okay, look at this value here, 6,920. Does this look familiar to you? Okay, where can we see this figure? It's actually here. Okay, remember? We say that the total commission income earned for that year is 6920. Okay, commission income earned 6920. For the entire year, I'm supposed to get 6920. And this will be the amount here, 6920. Okay, the amount transferred to profit and loss. Okay, let's look at the second account that we're supposed to prepare, the insurance expense account. Okay, just now I've already mentioned how do we do this journal entry, right? Double entry, withdrawal, so it's debit insurance expense go up, cash bank goes down. Okay, so this is step 1. Okay, step 2, do adjustments. Okay, other than power adjustments, right? There's something unique about this question is that they gave you a adjustment, okay, that is for the owner's personal insurance. Okay, so out of this $4,500, out of this amount, $900 was for the owner's personal insurance. Okay, so the word personal insurance means that it's actually drawings. Okay, so what are we going to do for this adjustment? We have to adjust for drawings, so I debit drawings. Okay, drawings go up. Insurance expense actually goes down. Okay, why do we subtract from insurance expense? Because this $900 is not meant for the business use. Okay, so I have to take out. Whenever I put in the insurance expense account, it is presumed that this is for the business use. Okay, but because this $900 is not for the business use, it's for owner's use, so I have to take out from the insurance expense. This is for the business use. Okay, so I take out from the insurance expense $900. Okay, and they also said that the insurance for the month of June, okay, was outstanding. Okay, if I look at the question, my year ends on 30th June. So because the amount is outstanding, okay, my year ends on 30th June, start of the year, 1st July 2017. I've paid 4,005, okay, from the question here, withdraw 4,005. Okay, amount that is outstanding, that means the amount is that's still owing. Okay, so this amount that's still owing is actually my accrued insurance. Okay, and even though it's still owing, I've incurred it for that year. It's just that I have not paid yet, but I have incurred it. Okay, so what do I do to my insurance expense? Because I've incurred it, I need to debit expense 1,002. Okay, credit accrued insurance. My liability goes up by 1,002. Let's look at our answers now. Okay, my insurance expense, okay, step 1, insurance expense goes up by 4,005. So debit insurance expense, 4,005. Opposite account, cash at bank. Okay, second step, do our adjustments, right? So just now we said that there's actually drawings involved. So I have to credit insurance expense, take out from this, because this 4,005, okay, not everything is meant for the business. 900 is for the owner's use. So I have to take out insurance expense 900. Okay, credit insurance expense 900. Opposite account, drawings. Okay. Then I will do these adjustments for my para. I have incurred 1,002, okay, it's just that I have not paid yet. So because I've incurred it, I debit insurance expense 1,002, debit insurance expense 1,002, opposite account, accrued insurance. Okay, finally, transfer everything to profit and loss. My balance should be a 0. Okay, $4,800. Okay, I'm now going to explain part B. Okay, state the effect on profit for the year if the followings were not adjusted at the end of the financial year. Okay, so for part 1, prepaid expense, I've already explained it in question 2C. Okay, go and look at question 2C explanation on the previous page. The one I'm going to explain today here is my income received in advance. So for income received in advance, I'm receiving an income that I have not earned yet. Okay, so because I have not earned this income, I'm receiving it for now, but I'm earning it for the next year. Okay, I have only earned it in the next year. So I need to decrease income because it's not meant for this year. It's not earned this year. It's earned in the next year. So decrease income, okay, credit income received in advance. This is a liability. Okay, question says that if I did not adjust for this, okay, what happens? So I know that this is a double entry. If business did not decrease income, okay, what happens? If business did not decrease income, okay, did not adjust, okay, what happens here? My income will be overstated, right? Because I did not decrease the income. Income overstated, okay, my profit will be overstated. Even though the question did not ask for it, right? Because they only ask for profit. We can also look at the balance sheet. Okay, what happens to my balance sheet? What happens to my liability? Business did not increase liability. Correct or not? Business did not adjust for the liability. So, since business did not adjust for the liability, okay, my liability is understated because they did not adjust for it. Okay, if I want to be more specific, I can say current liability because this is a current liability. Okay, that's it for this question.